What's going on, guys? This is Aaron from Departures Capital. We're here with Kyle, Floyd, CEO and Chairman at VOX Royalties. How are you doing today, Kyle?
Aaron, I'm fantastic. It's great to be with you again.
Definitely. It's nice to have you back. So can you start by giving us an update on VOX and what the company has been up to?
Yeah, absolutely. So I think we last spoke in May of this year. And since then, really, we've been firing on all cylinders. And that's been demonstrated really in the quarterly results that we just released, which were obviously very significant. We doubled revenue guidance. We had record quarterly revenues. We announced earnings per share of 5 cents. And so, we've been able to deliver what I think is an exceptional quarter and exceptional trajectory for our business and for our shareholders. And really excited about really just the validation of our business model. For those viewers that don't know, we focus on buying third-party royalties. We have a global database that allows us to find proprietary royalties that really no one else in the space is privy to. And we bring those in at better volume and better value than pretty much anybody else in the sector. And so it's really exciting to have the quarterly results that we just announced and excited about what we have in front of us as well.
Awesome. Love to see it. So the company, as you said, just released some pretty impressive second quarter results, including record revenues, as you said. Can you tell us more about this and why it's so important?
Yeah, so over the last 4 quarters, we've averaged approximately 490% growth in revenues. And that is, again, it's driven by a diverse set of assets now. And that's what we're trying to accomplish for our shareholders is build up a very diverse set of production stage assets at very good value in terms of where they've been acquired that will drive better risk adjusted returns. That is the essence of what VOX was created to accomplish for shareholders. Drive better risk adjusted returns with commodity exposure. And so we believe we're delivering that. We believe our last quarterly results are demonstrating that capability that the VOX business model possesses. And we believe that's going to eventually be reflected in our share price.
Awesome. So now can you give us an update on your most significant assets and tell us which ones you're most excited about in the near term?
I'm excited about a couple. We just recently passed through news on the Segilola gold asset. It's the highest grade open pit in West Africa. They announced first gold pour on July 30th. So that's an asset that we're really excited about. They're projecting to do on an annualized rate about 80,000 ounces a year. We have a very nice royalty on that project that will begin, we estimate, producing revenue for us in the fourth quarter. So that's one that we're really excited about. We have a couple additional assets that are ramping. We acquired the Janet Ivy royalty, which we realized inaugural royalty revenue from in the last quarter. We believe that there is some really exciting news on the cusp in terms of what that asset's going to be delivering over the near term to us as well. And then just continued growth from the existing assets that are already in production and alongside the assets that we expect to come online over the next couple of quarters. So we're at 5 production stage assets now. I expect that will be around 7 by the midpoint of next year with some room to probably overachieve on those numbers, which again is going to continue to drive that revenue growth and that cash flow growth. And one thing we didn't mention is we actually were EPS positive. We announced earnings per share of 5 cents in the quarter. We were able to dispose of 2 graphite royalties that were not core to our portfolio and actually put those into a vehicle where we think they'll perform better with electric royalties. So that last quarter, I think, really demonstrated what we believe is the best model in royalties and how we're able to deliver value for shareholders by buying good royalties at good value and realizing on those opportunities.
Very impressive. So for our viewers who are not aware, VOX has a very diverse portfolio of royalties above and beyond just precious metals. Can you tell us more about this and why diversity is important in a market like we're in?
I think diversity is huge. And I think, in a growth company like ours, we're able to grow. We don't need metal prices to run. We actually have a very good suite of diversification in terms of commodity exposure. And so we believe that's important. While we're precious metal weighted, 30% of our weighting is also to other metals. And so while gold has been relatively stagnant for, say, the last couple quarters, really almost the last year, iron ore prices were all-time record highs. Well, that certainly drove a lot of the growth in our revenues, was that ability to realize on record high iron ore prices. So that volatility works to our advantage when we're diversified in metal prices. So it is a precious focus, and that's organic for us because there's just more gold royalties than there are any other types of royalties for us to acquire. So that naturally happens. And when we're value focused, you're going to often find better value if there's more volume of opportunities for us to be acquiring. So that's really how our portfolio kind of comes together. But that diversification really lowers the risk on our cash flows. So if you're all one metal, that metal price goes up by 20%, it's great. But if it drops by 20%, that puts you in a very challenging position in terms of delivering value for your shareholders. So we believe having a little bit of diversification, like Franco-Nevada does, who's been really the long-standing winner in the space, we believe that's the best model. And I think that is proving out for our investors.
Definitely. So the current market we're in, as you said, metal prices have kind of stagnated, especially gold. So what does that mean for your business?
Yeah, I think investors really need to pay attention to us as a royalty company in this market. It's great when metal prices are running. You could put a little bit more risk on in certain situations. But what you're seeing now is, a stagnant, typically right now, a stagnant precious metal price, but cost inflation. And what that means is the mining companies are really in a kind of a troublesome spot where the revenue isn't kicking up unless they have production increases. But their costs are going up significantly. And a number of majors have reported in their quarterly earnings that the cost inflation is very real and it's very significant, which is eating away at their margins. A royalty company doesn't have that exposure. We don't have that variable cost structure that the mining operations do. And so you're not exposed to a lot of those risks. All the inputs are going up. Diesel has gone up. That's a huge input into mining companies. People costs have gone up. That's a huge input into mining companies. All the infrastructure costs and all the consulting costs that go around, all of those have gone up significantly. And if metal prices aren't running at a rate that is equal or exceeds that, then you're going to see margin contraction. And that is one of the reasons why I think investors need to be looking at a royalty company like VOX, because we're not exposed to those costs. At the end of the day, we are on the top line basis of those operations. We just take the revenue in, and we don't have that variable cost structure, which is really significant.
No, exactly. That's great. So what's the one thing you're most excited about for VOX Royalties in the near to medium term?
Yeah, the near to medium term, we have continued growth in our assets. Karora Resources operates the Higginsville mill in Western Australia. We have a royalty over open pits that feed that mill. They've announced a pretty significant expansion over the near term and medium term of that project. So we expect revenue to ramp there. And some of the mine lives that we expected to be extended. We've got tremendous organic growth. We are more exposed to Australia at a percentage level than any other royalty company that exists on planet Earth today. We have the second largest holding of hard rock mining royalties in Australia, second to Franco-Nevada. And what I don't think investors are really appreciating is that gold has been at all-time high prices in Aussie dollar gold terms for approaching 4 years. There's never been a more buoyant equity market for Australian-based mining companies with Australian assets. And what that means is they've been able to really exceed expectations in terms of deploying capital into developing their projects, which means all of our exploration stage projects, all of our development stage projects, all of our producing projects that are in Australia just continue to have the wind at their back in terms of progressing further than expectations, at least our expectations. And so our investors are going to realize that. And I think it's going to be a very productive organic growth cycle for VOX shareholders. Not to mention, we're always working on great accretive acquisitions, but that will always complement the organic growth that we've already created in the portfolio to date.
Yeah, it's been awesome covering your progress so far. So where's the best place for investors to find out more information about the company?
VoxRoyalty.com is always a good place to start. IR@VoxRoyalty.com. If you have any questions, we're always happy to be engaged. We're on all the typical social media platforms and happy to answer any further questions that we could be helpful with.
Awesome. Well, thank you so much, Kyle. I look forward to continuing covering your story and having you back on.
Awesome. Thanks, Aaron.
All right, guys, that wraps up the video. Thank you so much for watching. I just wanted to say, if you do support me, the channel, and all these videos, then kindly smash that like button along with hitting the subscribe button and the bell for notifications for future videos. I did also want to say, check the disclaimer down below. This video was sponsored by the company that we are talking about today. So check the disclaimer, full disclosure, and we're out of here. Always remember, guys, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.